Hello, and thank you for joining us for today's webinar, Financial Peace of Mind in the Age of Coronavirus, which is brought to you by the Better Business Bureau's Institute for Marketplace Trust, the FINRA Investor Education Foundation, and the U.S. Securities and Exchange Commission. My name is Melissa Bittner, and I lead the Fighting Financial Fraud program here at the BBB Institute. If you have any questions during the presentation, please submit them via the questions pane on the GoToWebinar interface. We will then answer as many questions as we can at the end of the webinar. And now I'd like to introduce our two speakers today. First, we will be hearing from Jerry Walsh, who is the president of the FINRA Investor Education Foundation and the senior vice president of investor education at FINRA. Then we will hear from Lori Schock, Director in the Office of Investor Education and Advocacy at the Securities and Exchange Commission.
Hi, it's a pleasure to be with you this afternoon. I know that right now it feels like so many things are out of our control, and certainly the headlines are hard to ignore. We keep hearing about coronavirus, COVID-19 related cases and deaths all around the world and increasingly here in the US. And we're hearing about supply chains being interrupted and financial markets experiencing really historic volatility. And, you know, a lot of individuals and businesses are wondering how they're going to be able to weather the storm. And when you think about the numbers, we have been seeing, one number to keep in mind is 121. That's January 21st, when the CDC confirmed the first case of coronavirus here in the United States. Another number that we keep hearing is 6 feet, the social distancing minimum that we're all supposed to observe. 22 million. That's the number of jobless claims just 4 weeks in after the coronavirus hit. And that's only through April 11th. So the numbers have been increasing, and coronavirus layoffs have erased more than a decade of record job creation. Another number is nearly 3,000, 2997. That's the largest point drop in history in the stock market. That was on March 16th, 2020. Dropping the Dow Jones Industrial Average 2,997 points. This isn't the largest percentage drop that we've had, but it's the largest point drop that we've had. But very shortly after, only about a week after, we saw the largest point gain that occurred, 2,113. 8 of the 10 largest point drops have been amid the 2020 stock market crash, but so have 8 of 10 top point gains, at least as of April 6th. So when you're thinking about all this, you might be thinking, how on earth do I find financial peace of mind in this time of pandemic and also unprecedented market volatility? And one of the key things that we'll be emphasizing is that it's really important to know yourself as an investor, to know yourself as a financial consumer, and to stick with your long-term financial goals. Because worrying about market volatility, market corrections, and making decisions based on fear is really not the best reason for you to be making changes to your long-term plans. All of us should have our long-term goals in mind and stick with them. We should know who we are as investors and financial consumers. And part of that is understanding how much risk we're able to tolerate. The FINRA Foundation has done some research into consumer attitudes on risk. And what we found going back to 2009, only about 9% of people nationwide said that they were willing to take risk in their financial decision making right after the 2009 crash occurred. And in 2012 and 15 and 18, when we resurveyed people, what we saw is that people were more likely to take risk. As many as 1 in 5 Americans were willing to take risk with their money. It'll be interesting to see what happens now that this market volatility has happened, record unemployment has been happening, and the coronavirus pandemic doesn't seem to be letting up right away. But thinking about risk and how it changes, one of the things that I want to share with you And I want to illustrate it by using a friend of mine, one of our colleagues here at the FINRA Foundation. When you think about risk and about how much risk you're able to take, there's a big difference between our perceptions and our reality. I just told you that 1 in 5 people, just as recently as last year, told us that they were willing to take risk with their finances. But it's important to be honest with yourself about how you really tolerate risk and how you might react when you're faced with a downturn. Most of the times when we think about risk, we're not actually in that moment of risk. I think it's fair to say that we're all right now feeling like we're in a moment of risk. But usually when we think about risk, we're sitting at a desk or at a computer. Well, here my friend Christine is sitting at Universal Studios on a very active roller coaster. This is Christine, who's wrapped in a yellow circle. And she's someone who maybe didn't want to go on the ride, but her son, who's right next to her, really wanted to go on the ride. And so she's sitting there feeling like, okay, I'm okay with this. I've got my seatbelt on. I'm doing okay. I'm going to get through this, right? Christine's pretty level-headed about risk. Her son, who I said was right next to her, and now he's wrapped in green, and the fellow right behind her, who Christine doesn't know, but clearly these guys, they're big risk takers, right? They want to be on this ride. They're loving it. They are absolutely loving it. But I'll bet you anything that these other people who are in the picture from Universal Studios, they wanted to be on the ride, but look how terrified they look, right? So thinking about risk, it's really important that we not miscalculate our risk, that we understand who we are as investors. When it comes to achieving financial peace of mind in a time of coronavirus, there are really 5 questions that I want everybody to ask. The first one is, do I have an emergency fund? A lot of us don't. Close to half of Americans do not have emergency savings. If you're in that category and if you're eligible for the economic stimulus checks that are starting to come out, you may want to set up an emergency savings account, something to help you weather job loss or increased financial challenges, especially at this time. If you're not eligible for the stimulus check, think about how you can help build emergency savings. The stimulus checks will be very useful for people who have debts and who need to pay their bills. So, you know, if you're in that situation, that's absolutely the first place that you should be thinking about how to spend your stimulus money. What are my debts? How can I prioritize them? How can I pay the ones that are the most important to pay? But if you can use the money to set aside emergency savings or to bolster emergency savings, I encourage you to do that. Another question to ask to help you achieve financial peace of mind is, how well are my finances diversified? If you're investing, what mix of investments do you have? That's really one of the best ways to manage risk, and that's why I emphasized risk so much just a few moments ago. We have tools and resources on FINRA.org that can help you think about how to diversify your holdings both within and among different asset classes. But the best thing that you might want to do at this time, if you're wondering whether you're adequately diversified, is to talk to a qualified financial professional. And my colleague Lori will be talking about how you can check out financial professionals. Should I be worried about market volatility? One of the points that I want to emphasize again is that it's important to stick with your long-term plan, whatever that is, whether it's getting out of debt, building up a retirement nest egg, or anything in between. Whatever you're saving and investing for, don't make rash decisions in the emotion that we're currently in. The environment right now is way too volatile. We all know that markets go up and down. It's really hard to remember when they go as low as I just mentioned, with that drop of nearly 3,000 points in a single day. It's really hard to think that they're ever going to come back up. but we've already seen some recovery, and they will go up and down. One of the ways that helps some investors is to think about market volatility as an opportunity to test your investment strategy and to think about how comfortable you are with the risk levels that you've taken in your portfolio. And obviously watching a market shift can be super uncomfortable in the short term, but it can also present opportunities for the long term. Again, checking your risk in your portfolio exposure, but you might even be thinking about adding new investments to your holdings now that they're cheaper with the market drop. What is my investment firm doing? We require at FINRA that all brokerage firms have a business continuity plan in place that addresses what happens in an event of an emergency. And so we've been reminding firms about their obligations. We have a lot of resources on a special dedicated coronavirus page that also has some great investor information that you might find helpful. But if you're having trouble reaching your investment firm, it may be that firms are experiencing unprecedented call volumes or online account outages during significant market movements. But if you do have trouble reaching your firm, please feel free to reach out to us. And again, we'll talk about some resources that you can use to do that. The last question that you should be asking yourself is, am I prepared to say no to potential coronavirus scams? We do see that social or physical isolation, according to research that the FINRA Foundation did with the Better Business Bureau Institute, is a factor when it comes to susceptibility to scams. People who don't have the ability to tap into the usual network that they would turn to talk about financial decisions are likely more susceptible to scams. It's also true that people who are feeling financial strain are more likely to be susceptible to scams. And so with that, what I'd like to do is turn it over to my colleague, Lori Schock, to talk about some coronavirus investment scams.
Hello, I'm Lori. I'm the director of the Office of Investor Education and Advocacy, and at the Securities and Exchange Commission, everyone has to give a disclaimer. So the views I express here during this webinar are mine and mine alone and don't necessarily represent those of the Commission or the staff of the Commission. So Jerry said I was going to talk to you a little bit about some of the scams that we're seeing, and I just wanted to go over some of the hallmarks of fraud, any fraud, not just COVID-19 or coronavirus related fraud, but you know, if it sounds too good to be true, it probably is. Or if it sounds too good to be true, you're dealing with an amateur, because fraudsters are very slick. They're very smart. They've gotten a lot better with their pitches. At the SEC, most of our enforcement actions that deal with retail investment fraud include guaranteed returns. And usually it's an unregistered product and an unlicensed salesperson. So part of the thing with investing in the stock market with publicly traded companies is there's a lot of information that's out there that's available, and it's there for you to go look at. When you deal with an investment scam artist or a fraudster, you'll see most of the time that there's a lack of documentation or something that can't be independently verified. So we'll walk through on how you can help protect yourselves a little bit later on. We go to the next slide. Okay, with unsolicited offers, this is where a salesperson comes to you. You didn't go out looking for an investment, and there are several different ways they can reach you. And like Jerry said, during this period of social isolation and physical isolation, people are on the internet all day long. So it may be social media, it may be an email, they may be watching TV, get a phone call. If it's something that you didn't go out and look for, you just need to be extremely wary of those types of pitches. Anything that includes a free dinner, free round of golf, free seminar of some sort. Again, those are also used by legitimate salespeople, but then they're used by fraudsters as well. And the best way to respond to these is to ignore them. Don't engage at all, because sometimes people want to, talk to the person on the phone or say to put me on your do not call list or something like that. If they're a scam artist, they don't care about the do not call list. And you just verified that, yes, this is a working telephone number. Same thing with email or text or otherwise. We can go to the next slide. So specifically, I wanted to talk today about some of the COVID-19 and coronavirus scams that we're seeing at the Commission, and ways that you can help protect yourself from some of these. We can go to the next slide, please. Okay, so we've had some issues with fraudulent stock promotions, and these are companies that are saying that they either have a cure for the coronavirus or they can help with the testing. Unfortunately, we've seen several of these companies, they've been a shell company with no activity for the past 5 years. Then all of a sudden, we have an international pandemic, and they have the cure for it. So also, we may see promotions such as research reports or something that will predict that a company's stock price is going to go up or hit a target price, or maybe they're working with a more well-known company and that they've received a large contract through that. We've had multiple companies that have done this, and while everyone is exercising and working from the Commission, our enforcement division has been working overtime during this work at home period here. We can go on to the next slide. A lot of times with these thinly traded companies, they're micro-cap companies, so it doesn't take a lot of volume to really hype up the price. And when it does, the fraudsters who are talking up the particular company or particular stock will drive up the price, and then they will sell out their shares, leaving the harmed investors holding the bag, if you will. That's a classic pump and dump. And we go on to the next slide. We end up with these trading suspensions. And so essentially the SEC can suspend trading when we believe that a company's information is inaccurate. Since this slide was put out on Monday, more than a dozen now has grown to more than 20 trading suspensions have taken place so far, and that list continues to grow. So, and if a company is suspended, that means that you actually hold those shares. You're not going to be able to sell your shares either, so you're going to have to wait for things to settle out. And to be honest with you, most of the time, once a company is suspended, very few of them actually come back out of that. We can go on to the next slide, please. Another thing that we've seen are some pitches for trying to help to invest for a charitable cause, something that will help those who've been affected by COVID-19. Charitable scams always come out in time of crisis. It doesn't matter what the crisis is, and this one is no worse. And we're seeing it. The Federal Trade Commission is seeing it. They will essentially pretend that somehow your investment is going to help provide money to people who are in need, but eventually they just end up stealing your money. None of the money goes to help anyone who's a victim, if you will, of COVID-19. You can go to the IRS's website to check out, make sure that they actually are a tax-exempt organization. But even then, it doesn't necessarily mean that yes, they have qualified to be a tax-exempt organization, but they still may not be using the money for the ways that they suggest. So just hang on to your wallet. I would suggest sticking with companies and organizations that you know and that you've known before this pandemic. If we go to the next slide, please. So as Jerry said, we're in this huge period of market volatility. We have seen an unprecedented drop in speed in how quickly it happened, as well as how quickly things have rebounded. But during this time, a lot of investors have essentially, it's a flight to safety. And so the scam artists aren't going to be cut out of that one either. We've seen companies that are offering bogus returns on CDs, certificates of deposits, that are generally a banking product, that are FDIC insured. We've seen some where they're requiring large amounts to invest, quote unquote, in their CDs, such as a $200,000 minimum. But these websites are just spoofed from legitimate companies. They're The URLs are similar to those of other firms, legitimate firms, but they're just a little bit off, and that's enough to then see your money get wired away. So watch out for these, and watch out for these red flags, if you will. If your bank account, an online bank account, may be paying like 1.5%. So if someone's saying I can guarantee, again, that word guarantee, 6%, it's too good to be true. And also, a lot of these are having you wire your money abroad. And I have to tell you, once the money leaves the United States, it makes it that much harder to try to get it back. And usually there's not going to be any restitution for that. Then they also will make the claim that these are FDIC insured, which of course they're not, because they're totally bogus. So if I could just go to the next couple of slides, I'm going to show you a couple of things that you can do to help protect yourself and some resources that we have available at the Commission. Investor.gov is our retail-facing website. And from there, if you were to click on Investor.gov right now, you would see that you could put in the firm's name or a person's name. If a person is selling securities in the United States, they're going to need to be licensed. And this is just the first step where you can see, are they licensed? Because if they're not in there, that's a big red flag on the play. Secondly, you can see their history. How long have they been licensed? How many firms have they worked for? Have they had any regulatory action taken against them or investor complaints? Also from investor.gov, you can check out any investment product, and that's on Edgar, which is our business database for corporate filings. Remember, I talked about that earlier, that publicly traded companies have to file. You know, sunshine is a good disinfectant, and this is a way where companies have to file these reports, and they're available through Edgar online for free. So just two ways that you can check that out. And then the last slide here. Verify who you're talking to and what their credentials truly are, because it's so easy to fake that. That's why independently verifying through BrokerCheck or through investor.gov. Also, don't pay for investments with credit cards. If you don't have cash to do it, you shouldn't be doing it probably. And you never should invest with gift cards. Those are almost always a scam. And be careful with overseas wires. Again, unsolicited salespeople who are contacting you, don't share your personal information. There's an awful lot of identity theft and illegal access to accounts. And they're smart, and their emails are getting a whole lot better. It used to be maybe broken English or a lot of grammatical errors. They're much slicker now and much better graphics. So just make sure you know where you're going. Contact your bank through your bank, or your credit cards through your credit cards. Don't click on an email or a text or something like that. And then you should never have to pay fees up front to invest. So that includes taxes or any other type of winnings or lottery or things like that. So I'm going to turn it back over to Jerry at this time.
And all of this really boils down to ask and check. Ask questions about the individuals that are offering you financial opportunities, and then check whether they're legitimate, the individuals, and also the opportunities themselves. We have resources at finra.org/investors on a wide array of tips for smart investing and also avoiding scams. Investor.gov is a fantastic resource. Lori and I, the SEC and FINRA, often work together to promote our materials. But BBB Scam Tracker is a fantastic tool for you to use. You can not only check out what the hot scams are in your area by doing a zip code search, but you can also report fraud if you're seeing it. Like a lot of transportation hubs will say, if you see something, say something. If you hear about a suspicious opportunity, especially if somebody is claiming to have access to an investment in the next company to cure COVID-19, those are the kinds of things that feed the trading suspensions that Lori was talking about. So you can report those frauds to any of many of us, including through BBB Scam Tracker. And then also the Federal Trade Commission has some great resources, as does the Federal Bureau of Investigation, on coronavirus scams. I wanted to make sure that you have links to all the places where you can report concerns and suspicions. The more people you tell the better. So if you're seeing something, feel free to contact the SEC and file a complaint or a tip. Contact FINRA, contact your own state securities regulator. There's a state regulator in every single state, and they often have one of the best ways to, learn about scams in your area, and they're a fantastic resource. And then, of course, the BBB Scam Tracker at bbb.org/scam tracker. With that, I'll turn it back over to Melissa to see whether we have any questions.
Thanks, Jerry, and thanks, Lori. We do have a couple of questions in the questions pane. If you have a question that you'd like to ask our speakers, we do have a couple of minutes to answer questions, so feel free to ask them there. The first one, thank you to Christine over at FINRA for answering them already. So I'll put you on the spot a little bit here, but it was a great question from a listener that says, do you have a suggestion of how much emergency fund you should have saved up? What you should be working towards?
Yeah, we generally say 3 to 6 months. For a lot of people, that's a daunting amount of money. Even a couple $100 has been shown by study after study, most recently by the Urban Institute, to make a big difference in your ability to weather a financial storm. So starting small and saving steadily is the most important thing that you can do. Even if it's just $20 a week, that's going to add up to real money by the end of the year.
And if I could just add one thing to that, also that money needs to be liquid, because imagine if your emergency fund was invested in the stock market at this time. You would have a lot less money set aside than what you thought you had. So I think that's important too, just to make sure that, especially like with this, where we sort of had a double whammy with a health crisis that then spawned an economic crisis, that you make sure those funds are liquid, preferably in a savings account or something that's you're getting a little bit of interest, but more importantly, you have access to it when you need it.
Absolutely.
Great, thanks, Lori. And I'll direct this question to you first, and then Jerry, if you have anything to add, feel free to do so. So to the point that you made about not giving personal information to a potential scammer because the investment may be potentially fraudulent. Don't you have to provide some personal information to a legitimate investment? Where's the line there?
That's a very good question. I would start with, did you go seek this person out? And then do a background check on them. Make sure they are who they say they are. So once you've done that, then yes, you're right that if you're working with a financial professional, you do have to give your personal information. They do need to have your social security number and things like that. But I wouldn't that shouldn't be the first thing. You need to make sure you know who you're dealing with before you hand out that really personal information.
And especially if it's an investment, you absolutely need to make sure that they are registered with the Securities and Exchange Commission and FINRA or a state regulator, and that they're operating in good standing. There's disciplinary information that's available through FINRA Broker Check or through Investorgov, so you can find out whether the individual or the firm, if they are registered and licensed, whether they have a history of complaints and customer harm where customers have lost money.
Great, thanks. And one last question as we're hitting 4:30 Eastern. We had a question here to Lori's point about keeping some liquid assets. Are CDs and an IRA a good idea right now, or should people be focused on keeping cash?
When it comes to investing, one, I can't give investment advice, but how about I lead the horse to water here? CDs are going to be a very, safe. I wouldn't call it an investment. I would call it a savings vehicle. They generally have lockup periods, so you may have a 1-year CD or a 2-year CD or a 5-year CD. So you're taking on risk of maybe not having as much return. But if this is where your liquid money is, I think that or a savings account either one would be a good place to have your rainy day fund. Jerry, do you have anything you want to add with that?
Well, the one thing I want to remind people is that retirement savings accounts can be pretty tricky, whether it's an IRA or your 401k. Those assets, part of the reason that they're tax advantaged is because they're meant for saving for retirement. And so Congress made them a little bit tougher to access. There can often be penalties or early withdrawal fees that you have to pay, and you always have to pay taxes when you take money out of an IRA. So we always encourage people to save for retirement through their company's 401k. If they have one, save at least up to the match that the company will give if they match your savings, but save as much as you can. That's a great way to save, through an IRA if you have access to that as well. But make sure you've got money that you can tap into without having to incur either early withdrawal fees or tax penalties. And so having, liquid assets like Lori was talking about is a really great way to go.
Great. Well, I'd like to thank you both, Jerry and Lori, for joining us and providing your insights today. Thank you to those that have listened and tuned in to our webinar today. We appreciate your time, and we hope you have a great rest of your day. Thank you.